I'm going to present for a couple of minutes and just talk about what NetDimensions offers to clients and why clients care and why you as investors might care as well. And then our CFO, Matthew Chaloner, is going to walk through the numbers and the industry. So bear with me.
Successfully running a global business can be challenging. Take Patricia, for example. She manages teams all over the world. Part of the problem is that everyone has different goals, even though they're all part of the same company. Patricia's goal is to make the company profitable. But her HR manager, Jacques, really needs to engage and retain employees. NetDimensions Learning makes this easy. Jacques can now deliver personalized and collaborative training to his employees. But it's not just local employees that require learning and development. Oh, it's the entire company's worldwide workforce. Employees can learn at work or on the go, whenever and wherever they are. At the same time, Maria, one of the company's business line managers, needs to conduct performance appraisals in Brazil to make sure her team members' personal and corporate goals are aligned. Other business line managers around the world can adjust their respective goals to keep them in sync with the company. NetDimensions Performance enables managers to adjust and update goals on an ongoing basis at any time during the year. Meanwhile, the company's compliance officer, Chaloner, needs to make sure that his factory workers have been properly trained in the latest occupational health and safety regulations. With NetDimensions exams, Chaloner can find out precisely how compliant his workforce is with the current industry standards. This ensures that all employees know what they need in order to do their jobs safely, develop their careers, and fill key positions in the company. For Jacques, retention is no longer a problem, and Maria is recognized as being a top performer for guiding her team to realizing their performance and development goals. And with NetDimensions Analytics, Patricia can see exactly how managing talent at every level in the organization can help her company succeed. With NetDimensions Talent Suite, highly regulated is now highly practical.
Okay, so I hope that gives you a flavor of what we do. We're a software company that creates solutions, talent management solutions, for clients in high consequence industries. And that's about helping those clients with their regulatory requirements and with their practical issues in managing their workforces and getting the job done day after day. That bounced. Our focus is on compliance, practical solutions, mobile solutions. We have fantastic award-winning mobile software, and local focuses. We're in more than 40 languages. We have clients in more than 50 countries around the world, and it continues. So what do we sell? We sell NetDimensions Learning, which is a plumbing level platform to help companies manage the delivery, recording of training and assessments and record keeping for all of their internal and regulatory needs. Performance, which is about goal and objective management. It's about appraisals. It's about 360 reviews. It's about competency frameworks. It's making sure that people are fit and proper for their job roles. Analytics, which is a very, very powerful platform that can take all the data generated in our system, marry that to other data sets, and do both prescriptive and descriptive analytics. And it's all about compliance. So we don't have our data center in our cellar, but we do have it listed with the Privacy Commission, meeting all EU data privacy requirements, and it's ISO 27001 compliant, as well as compliant with a host of other requirements from regulators all over the world. And here are some of the companies we work with. So we have more than 400 clients at this point, and well over 4 million users on the system, and it's grown. And with that, I'm going to hand it over to Matthew to talk about the numbers.
Thanks, Jay. Looking at our revenue, we've had consistent growth over the last 5 or 6 years. We're typically second half weighted. If you look at the darker blue, that's our second half performance. That's normally due because our clients need to get their spend in before the end of the budget year, so we get a lot of new business coming into Q4, and that business is renewed the following year. Our half-year results will be announced on the 22nd of September. We did do an operations update in July, and you can see here our revenue in the 6 months to 2014 was 9.1 million, and that was 40% up from the prior period. Looking at the same graph, but with the addition of invoice sales or our bookings, we've also consistently grown this over the last 5 or 6 years. And the reason why our revenue lags behind our invoice sales is that certain deals, such as our SaaS hosting and support and maintenance, we sign the client up on a 3-year deal and we invoice 12 months up front, but that will go into the balance sheet as deferred income or deferred revenue, and then we'll release that in equal instalments over the service period. Looking at this graph, this splits our revenue stream by product group, if you like. What I really want to highlight is this blue line here. This is our SaaS revenue. We're making a big push to grow our SaaS going forward, and in fact we grew that by 50% in H1 this year. We used to be a perpetual model, which is this orange line here. That would be an on-premise license, where typically a high upfront fee, and then an ongoing 20% support and maintenance fee. So the renewable income on a perpetual income is much less than on a SaaS deal, where we'll sign them up on a 3-year, 4-year, or 5-year renewing deal. We used to be mainly, our business used to go through dealers, so 80% of our business used to go through partners or dealers. We tried to move away from that model and go more direct, and focusing on bigger deals, large multinational corporations in high consequence industries. And one of the benefits of that is that we are now getting into bigger deals. So in H1 this year, the average deal size was $93,000 US, and that was up 48%. Looking at the operations highlights in the last 18 months, I joined in January 2013. We did a $6 million US raise on the AIM market in May last year. That was 40% oversubscribed. And on the back of that, we kicked off a 3-year business plan to substantially grow the business. The talent management systems market is a $5 billion market worldwide, and we have a very small share of that. So we decided to kick off this business plan. On the back of that, we made an acquisition in the US healthcare space, a business based in Atlanta. That acquisition launched our new healthcare division. That's receiving a lot of investment at the moment. We think the US healthcare market offers a huge potential for growth. The Affordable Care Act comes in next February. That's Obamacare, and that will mean more regulation for US hospitals. So our focus is in highly regulated industries, and US hospitals or US healthcare is going to become even more highly regulated. So we believe there's big potential in US healthcare. A big part of the business plan to grow the sales revenue is all about increasing headcount. We're a people business. We're really focused on increasing the sales quota carrying heads. These are guys that are given a new business quota to close every year. They're commissioned and incentivized to close a new business. And to give you an idea of the ramp up, we had 12 quota carrying salespeople going into 2013. We've now got 29. And they're supported by marketing, lead generation, relationship managers. We've also increased our services people and our core development team. We were also successful in securing a $5 million facility with Silicon Valley Bank. We have no debt on the balance sheet, but that facility is there for some additional small acquisitions, probably in the US healthcare space. As I mentioned before, our half-year results we're going to announce on the 22nd of September, so I can't give you the full numbers, but we did do a brief operations update to the market in early July. So deferred revenue was up 38%. As mentioned before, reported revenue was up 40%, invoice sales up 49%. And our SaaS revenue, which we're really pushing, we really want to push this income stream, was up 50%. The benefits of having more SaaS revenue is that we have more of a recurring revenue model, as we sign clients up on 3, 4 or 5 year deals. And it also gives us a more five-fingered grip on our clients. So we had an 86 client retention rate at the end of last year, but the dollar value retention rate was actually over 100%, it was over 104%. So as we retain these clients, we upsell to them. We sell them more seats, or we offer them more services like training or customization. And finally, the growth in new business was up 79%. And so this is the first reporting period since we made that major investment last year. So there are just some early signs that investment per the business plan is beginning to pay off. So what's left going forward? There's some more selective investment. So we did some more investment this year in our services offering to provide more services. As we're getting into bigger, more complicated deals in high consequence industries, these clients typically require more customization, more training, etc. So we've increased that offering. More strategic acquisitions. I mentioned the US healthcare space. That's an important area for growth in the future. So we're likely to look at acquisitions there. More compliance. Compliance isn't going away. There's going to be more compliance in the industries that we operate in. So we're going to double down on that and focus on these highly regulated industries. We are a global company. We operate in 8 countries. We offer our system in 41 languages. We're going to roll that out in further languages this year and next year. More mobile. One of the benefits of our learning management system is you can operate it on the go whilst you're traveling, or if you don't have an internet connection, you can work offline on your iPad, on your slate, or on your laptop. And we're going to continue to develop more apps for mobile. And more sales. You know, we went public when we did the 3-year business plan last year. We said we want to get to 50 million of sales revenue within 5 years. That's still a stated objective. We're on course to do that, and we will continue pushing. There's been a lot of consolidation in the talent management space, some big mergers and acquisitions, and we think there's more consolidations to come in the future. So we want to get bigger before the next wave comes. Thank you, and I'll just leave you with this sheet here on some shareholder information. Thanks.